Hi guys, welcome to a new video. Now, cycle wise, we are still doing the exact same thing as the previous two cycles. I'm going to show you that. So if you take the Fibonacci tool and you go to the bull run of 2012, so you take the high of that top from that bull run and then you connect it to the low of that same bear market. So we had a bull run, then we had the bear market, and what you can see then is if you take these measures right here that I'm showing, then we can see that every retracement that we had, after that we make a local top. That top, then we got a retrace, and don't be mistaken, but this retrace was a retrace of 40%. This is in 2012. Now, if you do exactly the same in 2017, so in 2016 we had a halving. So we take the top from 2017, so the top from that cycle, and we connect that with the low of the bear market. What can we see then? That after that low was made, we made a new run exactly to the same target from the Fib levels right here, and just a little bit higher, right? So to then retrace, I'm taking the magnet tool here, so I can't be wrong. And then we retraced 53%. Of course, we had the C story in 2020, which gave us a retrace of 72%. But without this black swan event, we would have been retraced only 53%. Okay, then from there, 2020, we had another halving, which gave us a new bull market, right? So if we then connect the highs from that bull market with the low that we had in the bear market, then what can we see? That we are now exactly above the blue line from the Fib channel. We will take price range and I will lay this right over. If it's working from here to here, then we can see that we increased 3.9%. So we went 3.9% above the blue zone right here. And if I do the same thing here, we can see that here it was 3.3, but it's not exactly. Then we do this again. So right from the blue line right here to the top, it was 3.96%. But we went over this blue line, right? So I don't want to be the perma bull bear, but cycle wise we are doing exactly the same for now as we did previous two cycles. So we had the low, we had a run to the upside to the blue line, then a retrace. Next halving we did exactly the same. We had the low, we had a run to the blue line to then retrace, and right now we are doing exactly the same. We had the low, we had a run to the blue line to then maybe retrace. Now, what do I also see is this. This is the Bitcoin exchange liquidation map. So we know that the market maker can take 500 million more in liquidations if he pushes the price further to the upside. Okay, but if he gets the price back down, he can collect $8 billion in liquidations from longs. So if you push the price further up, he will liquidate shorters for 500 million, and if he brings the price down, he can make 8 billion from longers that will get their stops triggered and their liquidations will go off. So they can make 16 times more money to get the price down, just by bringing the price back down. I mean, so is there a lot of use for them to bring the price up, collect 500 million, and then bring the price down and collect 8 billion. I know that things like this in the past played out 100% perfect. I did it right here. I did it right here. So why will this time be different? Of course, we have the ETF, and only if Bitcoin surpasses like 60k, then I have to admit, like, okay, this is ETF money. This time is really different. But so far, for me, this time is not different. Okay, so yeah. Okay, I hope that you had something at this video. Please like and subscribe. And if you haven't collected your bonuses, then you can check out the description. Okay, guys, have a good day. Bye-bye.